Good Thursday evening, everybody. How you doing? My name is Brad. I am the host of Technically Options Live here on the Benzinga YouTube channel. Good to see everyone again. I know some of you guys were here earlier today. If you missed it, go ahead and check out the replay whenever it is available of the Clean Tech Small Cap Conference. I had a little bit of an educational session on how to trade these types of stocks. These are more of the OTC stocks and some lower volume stocks. And so we talked a little bit about how to trade those types of commons and how we, develop a plan to attack those and things like that. And I kept one chart up the whole time. I had a whole entire list of stuff that I was going to talk about. And I talked about one stock. So it happens, but it was a good time. It was a lot of fun. It was a very, as you guys know, I'm primarily an options trader. And so to kind of talk about some of the stocks that I used to trade OTCs a lot. The guys that I trade with in our Discord, there's a lot of them that primarily trade OTCs. And so I'm very much exposed to that area of the markets. And so it was a good talk. We really appreciate everybody coming out today. There was a lot of views I saw at many times of the day. On days like this, it's so cool. Like there's content literally you can get up with Spencer and the guys for pre-market prep, and you can just go all the way through. We even have another show coming up after Mitch will be on at 6:00. So you got content all day long. There's plenty of stuff to do. So if you are new to this show, let me just give you a quick overview of what we do here. I'm a full-time options trader, primarily options. I changed my strategy. I don't even know how long now, probably about 6 months ago, where I decided I was going to focus in on options. And I wanted to be a good steward of the resources I have and things like that. So I've really been focused in on options for about 6 months, primarily as my main thing I trade. And so on this show, what we do is we talk a little bit about option strategies, and we talk about how to find options to trade, how you can develop yourself as an options trader. But we also do a lot of what's kind of weird in the options world is we incorporate technical analysis into our trading. And I say that's weird because not a lot of people in the options world rely a lot on technical analysis. And I of different thinking maybe. I think technical analysis fits perfectly with options trading. I don't think you should completely rely on technical analysis. Of course not. There's no one indicator that is perfect. I will never say that my strategy is perfect. I'll never say that what I have figured out is the only way to trade. I would never say that. However, I think from a when you're starting out as a new trader, what you need to do is you need to develop a system that works for you. And when I was working with some guys as I was first becoming a trader, and as I was reading books and developing my traits, one of the things that always stuck out to me was how do I develop me as a trader? How do I develop my style and things like that? Technical analysis was just the thing that always worked for me. And so I trade primarily an EMA crossover, the exponential moving average crossover. Trade the 8-day/21-day crossover. On the 3 or 5 minute charts, I've kind of bounced back and forth with it. I've primarily been trading, the Teslas and the SPYs and the triple Qs. I've kind of stuck real close to that. I scalp options, just to let you know as well. I am just kind of bouncing in and out of contracts all day long. I'm taking 10 to 30% gains, and I'm just playing multiple trades a day. I am playing weeklies almost all the time. So I'm using, pretty quick chart. I'm a 3 minute, I think is what works out the best after I've done some back testing and stuff like that. So I trade the EMA crossover. So that's kind of what I like to incorporate on this show as well. So as we get kind of going here, I got a couple of things I want to talk about, but please feel free to drop any ticker in the chat if there's something that you want to talk about from a technical analysis or a charting perspective. We try to do we try to be a little bit more. I don't want to say it's only for beginners of options trading, but I am very big into teaching people to kind of get over their fears of options trading. I'm very big on a lot of times when people like they hear that term that you're an options trader, and a lot of things come to mind, and I'm trying to get people to understand that listen, options are a valuable way of trading. Like they are, they're not going to empty your account out on one trade. I think that's what I most commonly hear is people think that, they're going to enter into a Tesla call and 5 seconds later it's going to go south and your whole entire account is going to be wiped out. And that's not necessarily true. You go into an options trade with a predefined set of risks. You buy the contract for $1 and the most you can lose is 100, right away. Kind of in advance, where your profit targets are going to be and things like that. But there's a wide variety of options that you can trade. You can trade the big guys like the SPY and the triple Qs and the Teslas, and you can see these movements happening really quick. Or you can trade something that's a little bit more of a like a lower volume style stock, and the movements aren't as extreme. That might be your style. That might be what works best for you. But the important thing, as we kind of transition here, the important thing is to develop what works for you. I will never claim that my strategy is the only strategy that works. I in fact, have people that would never use the EMAs or the moving averages at all. It works for me. I have tested it. I've tweaked it. I've done a lot of changing with it and things like that. And I apologize. I didn't have my chat turned on, guys. So I'm going to catch back up on the questions here real quick. I am of the nature that's what works for me. Again, don't think this is the only strategy that works. It might not work for you. One of the guys, actually, real great guy named Brad here in the chat said, explain scalping to everyone, please. And so basically with what scalping of option contracts, I am looking to flip the contract back for a higher premium. Okay, so basically, when you are buying option contracts, we're talking about calls. I primarily buy calls and sell them back pretty quickly sometimes, depending on what the ticker is, depending on what time of the day. I've got a lot of little nuances that worked out my strategy and things like that. But basically, scalping an option contract basically comes down to buying it at a certain price. Let's just say, like yesterday, for example. I bought the Tesla Friday weekly call for the 775, and I bought it for, I want to say around 260 or something like that. Well, this morning, and let me show you here, we'll just grab the chart real quick. This morning, and unfortunately, all these charts look exactly the same today. It's pretty bad. This morning, right here, 9:30, we have this big, also another thing too, my candles are different colors, just to let you know. So I changed the blue on my charts, represents what you would normally have as green, just to let you know. All that really matters is the direction they're going. The color doesn't really mean much. But I bought the 775 Tesla contract yesterday and sold it pretty much right about here in this big candle. So I was in that call for today for 5 minutes. It's capturing quick movements. Now, if you're familiar with Tesla calls, it does not take much to it doesn't take much to capture a move like that. And that's why I think a lot of people, when they see like an options trade, they see the Teslas and they see it go. I mean, I'm not gonna lie to you, I had a trade go south this afternoon. I had a trade that went, I mean, I was down $280 at one point, 260 at one point. I was back down to like $50. It was like all within a 30-minute period. I mean, I was going plus minus, back and forth, profits, not profit, loss, overall profit. I mean, it was just like, that's one of the things that you can't, now this might be, a little strange to some people. I'm not much of a, I don't advocate much for paper trading. I think to learn your strategies, and I think to learn the platform that you're using, I think paper trading is a valuable asset to have. However, I think in order for you to develop yourself as a trader, I think you need to have a specific amount of dollars that you are fine losing, that you have you don't need this money. You can just put it in your account. And if you blow it up, it's not a problem. I am of the nature that you are not going to fully develop yourself as a trader until you do that, because you cannot, and I will harp over and over again, you cannot teach the mental aspect of options trading until you are actually watching real money and watch it go up and watch it go down, and you could paper trade all day long, absolutely. And I think, again, to a certain extent, that is good. I'm a back tester, so when I am working on my strategies, if I'm changing time frames and things like that, I am in TradingView and I'm looking back at charts, and so I'm seeing if I would have taken an entry here on this time frame and if I would have exited at this time, and I'm manually doing things that way. But you are not going to be able to learn the true ins and outs of what it means to be an options trader, a trader in general, without getting into. That's why, like, there's so many times that people say, you need to paper trade before you can be successful, or you need to paper trade and be successful on your paper account, and then you can eventually trade. Again, I'm not saying that, like, that's perfectly fine. Like, if that's if that's the mindset that you have, or if that's the way that you want to approach trading, like, listen, like, that's perfectly fine. There's nothing wrong with doing it that way. Again, I don't claim to have everything figured out. I'm not perfect. I am certainly get it wrong more, than I would never claim to be like I've got the system figured out. Believe me. However, again, I am of the nature that when I teach people and when I mentor people and stuff like that, I'm telling them to get right into the game, develop your system, start trading and things like that. So that's the thing that you have to remember as you are developing yourself as a trader. Okay. So again, I took this trade yesterday. I was in the trade this morning for, 5 minutes. I think it really was 5 minutes. I could fire up Tastyworks here and see if I can get, let me take a look real quick while I'm loading that. I was in the trade for, about 5 minutes, I think it was. And then this afternoon, and then we have a nice little big drop candle there. That's not looking too good for tomorrow. I took some, I flipped some calls overnight. So normally with Tesla, it's such a, it's such a volatile stock. It's such a there's a lot of movement with it, and it can be very enticing. It can be very you see these premiums drop and you think, oh man, I've got to take advantage of this. And it's kind of what happened today. So basically at around, I don't even know, we were probably, let me see that. So if you're not familiar with what happened today, some of Biden's tax plans, I don't know if they leaked. I don't know how it got out there. But basically at around 1 o'clock, 1:05, it came out that he is going to present a increase on capital gains tax, and anyone making $1 million or more is going to be taxed like 39.6%. And SPY at the time was at, we'll just look at Tesla. No, let's go to SPY. SPY at the time was 416.68, 69.70, and that little range right there. And then on a 3-minute candle, we went all the way down to 414.65, 64. That's a pretty big drop for 1 o'clock on a Thursday. That's some volume. Okay. Now that is obviously that's a really big swing. Okay. So as an options trader, you see this candle and you think, I'm primarily not in options trade. Let's just say at 1 o'clock, a trading day, I'm, unless I have one of my swings that I have a little bit of time left on, I'm not actively trading at 1 o'clock. There's just not, there's not a, I break into my trading into 3 times throughout the day. I have my morning window at 9:30 until about 10 o'clock. And then I'm normally I have to try, believe me, get into a new contract until after 10 o'clock. And then I'm trying to clean myself up of any trades that I need to make, and take any profits that I see that are there for me by 11:30. Then we have the lunchtime break and it kind of slows down a little bit into the afternoon. And then 3 o'clock comes by and we have power. And so that's when I'm back into a trade is about 3 o'clock. And then 3 o'clock till obviously 4 o'clock. I am trying to make any more movements and things like that. So when this happens today, when we have this really big red candle, and then we even have some more settling down here. SPY at one time settled at 411.19. If you guys are having some problems with the audio, I apologize. StreamYard sometimes lags on my end. I'm going to I'll turn off all of my extra stuff, and it should pick back up here. I had everything fixed because it was working earlier today, but for some reason, man, StreamYard just does not like me. Does not like me too often. But anyways, you see this big drop that we have from 416.71 area all the way down to a low of 411.13. I mean, that's a really substantial. That's a big drop, and so as an options trader, that's really enticing to me. That is. Somebody said they had SPY puts from yesterday afternoon and was down until that news came out. Needless to say, I was green on the day. Yeah, I mean that's a huge day for you because at this point, SPY is in a bit of an uptrend. Nothing real amazing or anything like that. But here at 9:30, I mean, we're kind of in a little bit of an uptrend. But you can see, I mean, the range from where it was before that news leaked to where it finally settled, and for 11.15, as you can see, it bounced off twice. That I think is, I mean, that's really a big move that you could capture. And then after that, it sort of just traded sideways, and you could see, I mean, pretty much everybody traded about the same for the rest of the day. As you're looking through charts, you can see these guys will look pretty much the same. So it was an odd day. So as an options trader, what are we trying to do in this situation here? Because as I was saying, and just being completely transparent, I had a really green day this morning. I made some very good trades, and I made I had some good profit. I got a little greedy, let's just say. I got into some additional Tesla calls right around in this area here. And then you can see what happened. It doesn't take much to realize what's going on in this chart. The chart is clearly in a downtrend. And so what happens with this then, there's two things that are working against you. Number one, obviously, the stock is in a downtrend, okay? So the way that premiums move, they follow the underlying asset, just like if you buy shares of a stock goes up, your profit goes up. Stock goes down, your profit goes down. It's the same way with options. If you are buying calls, okay, if you are buying long, your options premium is directly related to what the stock is doing. So here we see Tesla continues to fall down for the rest of the day. So my contract price is decreasing and decreasing and decreasing. So what I can sell it back for is much less. Now, the second thing that's working against that is, what day is today? It's Thursday. Tomorrow is Friday. The market is basically done at 12 o'clock on Fridays. From an options perspective, it's especially done by that time. So now you have these two big things working against you. You have your premium decreasing because the stock is going down. And you have your theta, your time decay, which is pulling away at the value of that contract, to going into a Friday, which kind of increases a little bit more. You get kind of stuck in this situation. I don't typically. Thursday into Friday is very strange with the market. Not just options, but all of the market in general. I don't typically hold too often into a Friday. I don't normally open positions on a Thursday afternoon at 3 o'clock to carry into the next day. I am of the mindset that I would rather day trade. I'd rather open a position tomorrow morning, scalp it a couple of times back and forth, and then just be on my way. However, when I'm in this type of situation where the premiums are so low, and this is something that comes with just knowing the stock. This is something that comes with that when you're familiar with what a call for Tesla should be at a certain time of the day. If you can gauge the price, you can basically do some analysis on your own. See, okay, is it worth it for me to risk swing this call overnight? Tesla is now down $5.69, so I have that going against me. I have the time decay going against me, and it's Friday. So there's a lot of things that are going against me as an options trade right now. But weighing that possibility that, okay, I think right now, I think we're there's a little bit of an overreaction. I think this right here, this section, I think was a big overreaction. AB says the audio is choppy again. There's nothing. Let me try one thing on my end. I haven't done anything different. Let's try. Let me shut that down. Let me shut. I'm sorry, guys. It's just last week I had we had an internet issue in our area. I couldn't even do the show because I couldn't hold a connection. But it's just like I've got, my speed test I'm at 100 megs down, 20 megs up without any issues or anything. It says the audio is fine on YouTube. All right, so maybe it's yeah, it sounds like it's picking back up then. All right, so we're just gonna carry on. I don't know. StreamYard just does not like me. I apologize. All right, everybody's saying the audio is fine. I think we're seeing. So again, I have to weigh in my head like, okay, what's going on here? Do I think that tomorrow, a Friday, a day that is historically, and I don't mean historically over like years, I mean historically as in the last couple of weeks and months and things like that. Am I willing to take a risk with a call with a handful of them on this right here, this downtrend that's clearly a downtrend? Tried to find a couple of bottoms in 1, 2, 3, 4 even, and it couldn't, and still has not really consolidated or settled. The best thing to do with Tesla, though, honestly, I have found is just turning off the extended hours. I think that's another thing you have to remember too as an options trader. You're not trading after hours, you're not trading pre-market and stuff like that. So don't allow the noise of after hours to kind of influence your decision on what's Tesla is pretty predictable on certain days of what it's going to do. I've traded it enough, and I'm still not confident. Thankfully, I have a buddy of mine that kind of reassures me on many occasions. But there's certain stocks that when I watch them, I can almost guess what the premium is going to do. I can almost anticipate what is somebody said pre-market helps. Absolutely, pre-market helps. It's going to give you an idea of what's coming for the day, and I still like to see after hours and things like that. Absolutely, I'm not saying completely avoid it altogether. I'm just saying that if you are primarily an options trader, don't allow your decisions to be directly influenced by the pre-market and the after hours chatter. That is probably the best way to describe it, because there's a lot of chatter that goes on pre-market. There's a lot of chatter that goes on in after hours. So you have to kind of weigh. There's all these things that are weighing against you as an options trader. You have your time decay. You have your stock that's going down. You have the chance of basically that option expiring worthless. And listen, my option expires tomorrow. Tesla could completely reverse and not go anywhere near my strike price, and I'm out. There's just I'm out that money. I don't have I don't have the opportunity to see what happens over the weekend. I don't have the opportunity to trade it on Monday. My option expires tomorrow, and therefore we are. Somebody said, "Were you going to say that Fridays are historically bearish?" You didn't finish the statement. Yeah. So I would say from a, I don't have the data. I'm not this is not a guaranteed statement. I am just trying to gauge in my head how Fridays typically go. Overall, I don't know what would be more of a Friday. Is it bear or bullish? I just know that the second half of Fridays are typically, one, very slow, and two, a lot of profit taking on Fridays. I don't know. Again, and I'm coming at this angle from an options trader. I'm coming at this from the angle of, okay, are people taking profits most of the time? Yeah, they are, especially on the Teslas, especially on the triple Qs and things like that. Like there's I don't know like how Fridays historically are overall. Like, are there more green days? Are there more red days? Stuff like that. I'm focusing specifically on the first half of the day because, again, the second half of Fridays, there's less volume. That's just that's true. There's less activity. There's not as much chance to kind of recover and things like that. Next question. Somebody said, do you do a lot of options at a time, or a certain number to just concentrate on? When I am scalping options, so I have, I have, and Brad said very hard to roll a strategy on Friday afternoon. I'm going to go back to that next about rolling out a call. When I'm actively involved in scalping contracts, I'm only focusing in on one stock. Okay. So if I'm picking Tesla, which Tesla has been, what we've been playing, a lot of, I'm focusing only on Tesla. I don't have multiples that I'm scalping at a time. I don't have, I'm not trying to. So a big problem with the way that, somebody said, who is this friend who is helping you and supporting you and baiting you into Tesla late in the day? That's a very fun story. I'll have to save that for another time. How about that? You have to. You made me lose my train of thought now. You're the one who's the friend that I'm talking about, of course. Came here. He said before, I sent him the link to my show, like he's going to be a good friend and support me and stuff like that. What does he say he's going to do? He's going to troll me. He's going to come on and troll me. Oh, yeah, focusing in on options. See, I can only focus in on one thing at a time. Anyways, I'm trying to play one contract. I'm trying to play, two contracts, but it's one stock. I have other options that I have in my portfolio that are longer terms, that are more, that are farther out, that are that I am I'm of the swing trading nature. I do those as well. I am primarily, when I'm focusing in on contracts, I am trading one ticker at a time. Again, that is for most people. You might want to play multiple. You might want to play a bunch at a time. You might want to play 15 different tickers, whatever works for you. Again, if that's not your strategy, don't play just one. Work whatever works for you. I am very actively involved in my trades. I am trying to take movements per candle. I am trying to capture profits 10, 20, 30, 40% multiple times a day. So I am better if I am focusing in on one stock. And that's, again, according to all of the trading styles that I've had, because believe me, I've had, I've tried breakouts, I've tried pennies, I've tried, large cap, I've tried everything. And where I've arrived as what works for me is to scalp options. Again, it might not work for you, but it's what works for me. So I'm focusing in on one. Now, let's just say, for example, if I am trying to do swing trades on options and things like that, because a lot of times when I'm teaching somebody how to trade options, or if I'm working with somebody on how they can improve their options, the last thing I suggest that they do is jump in and start scalping options. I think it's just, it's not, you need to learn how option contracts react, because, for example, like, you have to remember that just because a stock is going up and it's going up at a decent pace, that doesn't necessarily mean that your contract is going to go up. It's not going to run as much as you expect. You have to look at some of the underlying things, and those are, well, the Greeks, the time decay that works against your stock or works against your contract, how much your stock or how much your contract reacts to the stock movements, how much it goes up per dollar, and there's a lot of things. So it's not just like, like if you buy a contract X amount of price and then that stock goes up, that contract is automatically going to be worth, a certain amount. Thankfully, we have a lot of resources that can help us to learn how to trade options, and thankfully, I Somebody said, why would I look at time decay if you're day trading options? I only look at time decay when I'm swinging those overnight. When I'm involved in scalping options, when I'm day trading those, I don't care about anything but other than my EMAs, my price action volume, stuff like that. I only mean the time decay when I am, like, for example, like I was saying earlier, I took a Tesla call for swinging overnight. Or I took a Tesla call yesterday into today. I'm then focusing in on the time decay and I'm trying to evaluate in my head, does this make sense for me to try to swing this overnight, even though it's going to be a Thursday, even though tomorrow will be a Friday? And I now have that working against me. Plus, I've got to have Tesla make up the difference in all of that. I am of the nature, again, when I'm scalping, I'm just watching price action. That's what I'm working on is just price action. I'm not so much. You have to remember too. Now, like, say for example, like you get into a stock. I was trading SOS this week a lot, and you also have to remember too, like a stock. Like let me show you this one because this is we'll talk about AMC for a moment. Let me bring up the AMC chain and we can. I want to show you a couple of things about that. So AMC, what did AMC finish out today? Does anybody remember? Why is there no options available for AMC? There we go. Come on. Everything's running slow now. There we go. Okay. So AMC. AMC is at $9.99. Is that what it is? That what it is? $9.99. AMC's option range is it's very condensed. Okay, so you could have bought the 1050s. I think at one point I want to say were 32 cents. Don't quote me on that. I could be wrong, but like for example, this 1050 at some time earlier today. Let's see here. What the heck is that one? AMC was 1065 at its peak today. And that was at, what time was that? That was right after open. So you could have bought the, you could have bought this 1050 and it would have been in the money. The premium though, I'm trying to remember what the premium was. It was not that expensive. I really don't think it was that expensive. What I'm trying to say though is you can see this range of option prices here. So I mean, even going, let's just say, let's start with the $7 strike price. The $7 is $3.05 with 94 contracts of volume, going all the way down to what was the high, the 29, where there was 638. Okay, but as most options, as most of the chains are going to be, your volume is going to be primarily focused in around on the closest strike prices to being in the money. Okay, and again, let me just real quickly, I always try to go over the fundamentals and things like that. An option that is considered to be in the money is one of the strike prices that is where the price of the stock is at. An option that is considered to be at the money is normally one step down from being in the money, and then an option that's just out of the money is one of these like plays that are $17, $16, $15. The reason they're out of the money, the reason that they're called that, is because the chance of it being in the money is very, very, very low. Now, on Tastyworks is my primary broker. Not sponsored, just enjoy using them as an option trader. It does tell me my in the money percentage chance. However, I don't really focus on that too much because these things could change in an instant. But it does give you a little bit of an idea of what you can look for. But what I'm trying to show you here on a stock like AMC, there's not much movement with the contract. Okay. So even going into the highest volume in the money one, $9, okay, is the strike. It's in the money by $1, let's say. The contract is $1.02. Now, Tesla contract that's in the money, 715, is $12.20. Okay, you see the difference there? Even as you remember the stocks, GameStop, like we still talking about, is GameStop still doing their thing? You could see the range here. See how much of the premium there is that much difference in the range of premium. there's I personally would, if I'm looking at AMC, you're going to have to go pretty heavy on one of these. I think you're going to be better off with playing a. Let's look at May 21. I'll see these are a little bit better. There's some more of a range in these here. Like even going from the 7, it's $3.20. Why is the contract more than it is on the weekly? It's because you have you have a better chance of that stock or that contract finishing in the money because you have farther till expiration. That's why this contract is more expensive for the May 21. You have a range of $3.20 all the way down to even the $15 call had a lot of volume of 46 cents. So I mean, there's almost a $3 swing that you have. You can see where the option might move to. Okay. And looking at the weekly though, you can see that the AMC, the $7 call is $3.05. And then you can like try to see these volumes here. Like you're for a swing overnight, you're not going to capture as much of a movement as you would on like a Tesla. A Tesla overnight, I mean, just from a $25 strike range, you're going from $9.40 down to $2.27. Like you have plenty of room in order for you to capture like a movement. You've got a better chance on the Teslas. Okay, you've got a better chance in order, like, let's say for example, like it's you're wanting to start swing trading, or you're wanting to start day trading, scalping, overnighting. You know, again, I'm primarily capturing small movements throughout the day. That's what I prefer to do. But let's just say like you want to swing a call overnight, and you think, okay, what is going to give me my buddy just messaged me. Sorry. Yeah. I at one point of my trading career, gosh, I don't even know when now. At one point in my trading career, I had never traded Tesla. Not once. Not an option, not a share, nothing. Now, primarily all I trade is Tesla. But again, I'm trying to, so I have to like okay, so I have we're getting a little volume here in after hours. Look at that. But I told you, don't pay attention to after hours if you're an options trader. I just went against what I just told you to do. So what I'm trying to do is I have to, like, what's going to give me the best benefit for the capital that I'm investing? Do I want to invest $300 into AMC and maybe capture a dollar movement? Do I want to invest $300 into a Tesla option and capture a 500% movement? What's going to make more sense to me as an options trader? Again, I'm trying to capture quick movements. I'm trying to capture 10, 20, 30, 40% multiple times a day. I use the baseball analogy. I'm trying to get on base. I'm not trying to hit home runs every single time. Yeah, the home runs are great. I hit one last night into today. I had a huge, I bought a Tesla 775. It went up by almost $4, $3.50 it went up. That's a home run in my opinion. That's a really good swing overnight. However, I know that's not realistic to do all the time. I'm not holding out options in order to do that all the time. I know that that's not going to make me a successful options trader. The thing that's going to make me a successful options trader is capturing those small movements, but also being okay with those small movements. Like, am I fine leaving some profit on the table? And obviously, you know, it still is like, no matter how hard you try, you know, we get that FOMO, we get that fear of missing out, right? We sell a contract for $2 and then 5 minutes later it's $4 and you beat yourself up about it. You got to realize that, yeah, it's just going to be part of the game. Like, you're not going to get it right all the time. I think once you realize that as a trader, you are going to get it wrong a lot. I think once you get to that point of being okay with it, like, listen, like, it's going to be difficult for you. Like, I still struggle today with missing out on profit. I will sit and I'll be like, what I'm trying to do now is when I'm out of a stock is completely removing it from my chart. I don't want to look at it any longer until I'm ready to get back into it. And then I'll, you know, pull my charts up and stuff like that. I am trying not to sit and stare at the chart, because what's going to happen is that stock's going to go the opposite way. And it's, you sell, like just the other day, I sold into what I thought was a reversal candle. I sold into it. It faked me out and it went up spiking, and I missed a pretty substantial amount of profit. I can't do that. I was out of the call. I was not in it any longer. I need to get away from it. I need to stop looking at that chart. There's no reason for me, when I'm not in a position, to be sitting and staring at that chart if I'm not anticipating getting back in right away. So when I trade, when I'm out of a call or when I'm out of whatever position I'm doing, I close the chart. I go to something else. I'll just pull a SPY up. I'll pull a triple Q or whatever. I'm trying my best not to look at that chart, because what's going to happen? Again, it's going to go against what you did, and you're going to miss out on profit. And listen, tomorrow you're going to miss out on profit. On Monday you're going to miss out on profit, and so on and so on and so on. You've got to be okay with missing out on profit. But then what happens before that? Again, let me go back to my the AMC chain. The tightness of the volume is within $1.50 of strikes. And right now, 9 to 10.50, there is $1, not even $1 range. There's not much like room for growth there. So with an AMC, I saw somebody ask me earlier. Somebody said, how many contracts do I buy? And that's a really good question. It really depends on the underlying asset. Okay. Now with Tesla, I play no more than 3, 4, 5 at a time. Like for example, the contracts that I flipped overnight, I had 4 at one point. I took 2 out and I kept 2 to swing overnight. Yesterday, when I swung calls into tonight or into this morning, I had 2. I had the 775, or I had 3. I had 775, 780, and the 800, but I had 1 of each contract. Typically with Tesla, that's what I'm playing. I'm playing 1 contract per strike. I don't like to load up a lot of them. Again, and this afternoon, I will, a full admission, I got really, I don't want to say that I was talking to my buddy, and I really, I don't know what happened, but right here, this little situation right here, I swear. So my white line is the 8-day EMA. The green line is the 21. Okay. I swear that white line crossed and gave me a closing entry signal. I'm very much confident that it did, but as you can see, it didn't. Okay. Now I can use that as an excuse, but I'm going to be honest with you. I was on, so I watched this candle, this big SPY. Well, it's the same thing on Tesla. I don't need to change it. I watched it happen, like literally, like just unfold. I was waiting on the queue to do my my small cap clean tech conference talk from earlier today. I was waiting for that to start, and I was watching a chart. And I remember saying to the people that were helping me get it set up, and I said, "Oh my gosh, SPY just, like, what in the world just happened?" I had no idea about the news. I didn't know anything like that. Automatically at that time, you know where my thought went to? I was like, these Tesla premiums are gonna be cut in half. And they at least were in half. So even before I am looking at even before I'm going for an entry signal, automatically in my head, I am disconnecting my trading strategy from what works to what might work. Why? Okay. It's Thursday afternoon. Tesla premiums, I know we're already up because I played them. Now we've got 3 huge red candles in a row. I'm thinking, oh my gosh, I could get the, what were we talking about? Which one? We were talking about the 775. The 775 is closed at 41 cents. I sold it this morning over $6. So that's a huge swing. 41 cents compared to what it was this morning. 5 minutes into market open, it hit over $6. So when you start to again, I was wrong. I messed it up. I'm not going to try to say that, here's what I did. No, yeah, it's, I made a bad trade. I probably would have done it again, given the opportunity to go back to it. I just think, again, that's a situation where, like, the risk. I just was talking to my buddy before about swinging a call overnight. Anyways, we always talk about, like, that's one of the best recommendations I can tell you as a trader is to find a friend that you can trade with on a consistent basis. Listen, I am lucky to have that. Okay. I am just beyond words lucky to have people that I can talk with throughout the day. I can bounce ideas off of. I have people that can support me. I have people that can call me out. That is something that really helps you as a trader. And so when I'm talking to people and I'm asking them, like, hey, like, what are we going to do as far as leading into tomorrow? Are we swinging anything into tomorrow? Are we going to try to, what are our thoughts? I look at a call like this. I see that it closed at $2.27 for the 745. Tesla's at 717.50 right now, and somebody just said your options will probably expire worthless tomorrow. That might be, but in my head, again, I've weighed the risk to the reward. I've thought to myself, okay, the premium is so low. All it's going to take is just a little bit of a run, and Tesla typically is going to give you a spike at some point. It's going to be, in my opinion, it's going to be worth it to swing this call overnight. Now, again, is there a possibility that it might expire worthless? Absolutely. And yeah, somebody said never hold to expiration. Should you? No, you don't do that. You're like, I will be out of that contract by 10 o'clock tomorrow morning. Somebody says, doesn't that get eaten up by decay? Again, that's part of what I'm weighing. I'm weighing here that, and yes, the short answer is it is like there is going to be some theta that is, let me see what's the theta on, oh, but that's 273. That's because that's one. 136 is the theta. It's pretty high. I'm going to lose. I'm going to have to, even Tesla will be held back to 775. The option will not be $6. Well, no, obviously I'm not trying to get Tesla to 775. Tesla's, I don't like, I'm not going to be in Tesla long enough for it to get to 775. I'm playing the opening spike. I'm playing that big candle that I anticipate coming, like I did this morning. Again, I'm playing movements. Okay. I'm anticipating candles moving and to give me a spike on that option. So again, to go back to what I was saying, yes, theta is going to eat my contract alive. So not only right now is Tesla down in after hours, I also have the theta working against me. So I have the two things that are causing me so much pain as an options trader are going against me are happening. The theta on a Thursday into a Friday is amplified because they expire tomorrow, and the contract and the stock itself is going down. So both of those things already, I'm in the hole tomorrow morning. I was in the hole already, even if Tesla had not gone down, because you're losing value to your contract overnight. When you're swinging a call into the next day, you're automatically losing value. But again, the price of a 745 strike call being that low, to me, is worth the risk that might come with it. Now, again, let's take a couple of steps back. A part of my trading strategy, I've identified that this risk reward fits my system. It might not work for you. You might not be able to risk $227 on a certain call. And if it go completely against you, you lose half of that. I'll be able to recover something of that. I'm not going to lose completely 200. Like that call is not going to be worth $0 tomorrow. I'm not holding it that long. But part of my risk is being okay with that happening. Let's just say if something happens overnight and Tesla tanks by $300, I'm okay losing that contract price. Again, I've factored that in to be a part of my strategy. It's perfectly fine. Now, as I was saying before, I had 4 of these contracts. I only have 2 right now. I had to get rid of 2 of them because they went against me so badly that the risk to swing those overnight, it was not a part of my strategy. So I had to take a loss. I was still green on the day. I was not nearly as green as I was at 10 o'clock this morning. But to me, again, my system, I can't carry that much risk into a Friday. I can't carry that much capital being tied up, knowing that there's a chance that a lot of this is going to get destroyed. I can't do that. So to me, as I'm watching tick by tick, and I'm sitting here going, oh my gosh, I'm such a... we do that. Like, you're going to do it tomorrow. You're going to do it next week. Like I'm watching this contract just completely tank against me when I thought I thought I made a good entry. I thought that this right here, I thought that crossed, and that's an entry sign for me. That is what I would go into. Like, even we had good volume, we had a couple candles in a row that were good. It didn't work out. So either way, I had, from what I thought was a good entry signal, didn't work out. I have to then, so I'm already, okay, so let me take a couple steps back before that. I'm already in my mind thinking of swinging calls overnight, because again, we had this huge drop here. We had these huge red candles, premiums tanked on Tesla, and I am thinking, okay, the premium drop and where it might go to, it's worth somebody said, am I watching the 1 minutes? No, I am trading typically the 3 minutes. I will watch the 1 minute depending on what's going on, but my target is the 3 minutes. That's what my main chart. I use the five. I was using the 5 minute, but I think the 3 minute is going to be my new chart. So again, in my head, I'm already weighing the pros and cons of like, okay, listen, it's going to decay. It's going to go against me in the morning. However, there's a chance that Tesla can, I don't need a lot, right? Like I am, I'm not looking for Tesla to run $50 tomorrow morning. It doesn't need that for me. You have to remember that Tesla is the way that the contracts move. It's a lot more amplified as like, instead of an AMC. Like AMC, if you're playing one of these stocks, if you're playing the AMC, you need AMC to go. Like, you need it to really, really move. If you're in on the 950 call, let's just say, and you bought it in at 55 cents, you bought it right before close, let's say, for example, AMC is at 998 right now. You need AMC to go. Like, you need it to get on its horse and run. And I'm talking about, you need you need a good range on AMC to go. And I mean, you have to think to yourself, like, is it doing that? Like what have we seen with AMC lately? Like what's happening with AMC? Like, is there going to be a legitimate enough chance for AMC to pull that contract out of the mashed potato time decay? Like, is it going to make sense for you? And again, I don't think so. I don't think on a lower end contract should you. I always tell the sweet spot for options is 30-ish days, 40-ish days when you're entering in a position. That's kind of the expiration that you want to look for, because it gives you enough time to kind of let the stock go against you. It gives you enough time to make adjustments, like, and let things work themselves out. And it's not going to go against you so quickly. So I always tell people, when you're first getting into options, like right now, for example, like let's say AMC is the stock that you want to get into. It's a popular stock right now. It's in the, everybody's talking about it online. It's on all the forums and things like that. I would say the May 21st would be the only option that you look at right now. The May 21st, you have, for the $10 strike, you have $1.27, $1.30 spread. You could get a $10 strike AMC May 21st call for $1.30. I think that is a legitimate risk for you. I think it has enough time. First of all, you've got a month. It's 30 days. So what is that? 22 days of trading days. You've got enough time in order for this call to potentially gain some momentum, because with a AMC call, you need that. Like, you need AMC to go. Like with Tesla, you can capture these little movements and things like that. You have to remember that too. Like, you're not going to be profitable scalping AMC options all day. Like somebody just said, under $10 stocks, you'll be better to trade the underlying stock itself without caring about getting eaten up by premium. That's exactly right. Like, you're going to capture more of a profit on an AMC style stock buying the actual shares than you would if you're buying contracts. Now, let me also just say this. Let's say, for example, you prefer playing options. Like, I prefer playing options. If I was going to play AMC, these $10 options right here that are $1.30, I would buy 7, 8, 9, 10 of them, because I need that many contracts in order to capture the little bit of movement that I anticipate that's going to happen. I am thinking to myself like, okay, like AMC is being there. There's the forces of darkness are knocking AMC down. It's not moving that much, and if it does, it's real quick. It's not very fluid. Options are not flying on AMC. They're not doing like what the GameStop did. It's you're better off in those types of situations to just play the underlying stock. However, again, if you are trying to play the options, you need to like you don't buy one call. Like and expect yourself to make thousands of dollars. Like don't do that. Like that's not you're not going to capture that big of a movement in order for all of your hopes and dreams of becoming rich to, like that's not going to happen. Like you don't want to set yourself up with unrealistic expectations with option trading, because that's the thing everybody thinks about with options is like, listen, like you could catch a runner and this stock goes up by 600% or something crazy like that. Your option contract went up by $12 and you just made $1,200 on $100. Like that's what everybody thinks when it comes to option trading. And yeah, the chance of that happening is there. The chance of getting in on a contract at like $1 and it going up, it's there. Absolutely. However, like take a step back, okay? Like remove all of your personal bias towards the stock. If you like AMC as a company, that's great. If you like GameStop as a company, that's great. Like you need to invest in and you need to be involved in companies you like. I think somebody said but Lambo. Exactly. Like you want a Lambo. Like nobody wants to, you don't want to drive like a Ford Focus, right? You want to drive a Lambo. And so give yourself a chance to flip a contract for a Lambo. No, I'm kidding. I'm kidding. That's hoping. That's not trading. That's gambling. That's crossing your fingers and just saying, oh man, I hope. Like that's not how you're going to become a successful trader. You might one time out of 10 hit that runner and you might score a big profit. You might flip a call for $600, $700, $800 and think you get in at $2 and it runs to $9. I mean, that might happen. And honestly, Chad says, thanks for dropping such honest input on honest trading, options trading. Smash that like button. Chad, thank you. I appreciate the kind words. Yes, drop a like, leave a comment in the chat. We're all over tonight, but that's what we like to do on the show. We like to kind of just be interacting with the chat, and we like to talk about practical stuff with options. So don't set yourself up for failure when you're entering into a call. Like I said, you might have caught that runner. You might have got that 1 out of 10. Those other 9 though, how much did you lose? If you're playing these 20, 60, 80, $100 contracts and you're constantly, losing on these, like those add up over time. They're really enticing. They're there. They're on every stock. Like you can buy these cheap contracts all over the place. Somebody said 414 sold my first put, Mara, 423, $43 for 330. Upside down now, any way to minimize loss. So what is Mara at? Yeah. So again, when you are selling contracts, when you sell a put, you are anticipating the stock to go up. When you sell a call, you are anticipating the stock to go down. So it's kind of backwards, but when you're selling, you're taking an opposite position. Also, when you are selling positions, you are working like you want theta. You want that contract to get as close to, if not expiring, worthless. Like you want that to happen. Theta is your best friend when you're selling options. So it's gone against you. It expires tomorrow. Is it tomorrow? Yeah, tomorrow is the 23rd. Any way to minimize loss? I mean, you could. I don't want to. I don't know enough about what Mara has been doing. I mean, it's clearly it's these last couple of candles right here kind of concern me. Obviously, you are. I would get out as quickly as you can. Let me just say that. I might. $30.50 now. It's down. What is it down today? It was down 11%. Man, if you can catch a spike in the morning, that might be your best bet. I would not hold it much longer than 11 o'clock. I wouldn't wait too long to get out of that. That's going to be that's a tough one. But listen, like also like don't let it discourage you. Don't like, yeah, like it's when when you like go into a position and you think it's, you've nailed it and you did your analysis and you think you're like it's perfect for you and it goes against you, it sucks, man. Like it just happened to me 4 hours ago, 2 hours ago, whatever it was. I'm still thinking about it. It happens. It happens. Be okay with, not getting it right at all times. Be okay with realizing that, like, listen, like 10 to 30% gains consistently over time is going to work out better for you than hitting that one runner that you get every so often. You can look through my profit and loss statements for this year. I'm profitable this year. I've done good this year. I've made some really bad trades. I've had some losses and things like that. But I say to close with this. You are going to look into my profit and loss statements and you are going to see a lot of 10 to 30% gains. You are going to see a lot of these small little captures of profit. You've got to develop a strategy that works for you. You've got to know what you're doing. You've got to know in advance, why am I entering this stock? Why am I exiting this stock? Not because so-and-so told me on Twitter that it's time to leave the stock. That dude already left. He dumped his shares on you. I'm sorry to say it. You want to know in advance, okay, this moving average crossover happened. That gives me my entry. I'm now exiting because of this reason. Kenneth, he says, just at work, but quickly tuning in. Great job. Thank you, Kenneth. I appreciate you stopping by. Everybody, I appreciate you guys stopping by. We've had a really good response to the show so far. I think this is episode 3 or 4. We're about a month in now. And I think they're queuing me off here, so I think we might have maybe a quick second for any questions. Aaron, we're out of time?
We got Money Mitch coming up, but you got a sec to
take a question. Take a question, dude. I'll join you.
Listen,
take a question. Let's do it.
When you put that new tripod up, I bought one of those exact things. I was so excited that when you did that new setup and everything, I was so excited because, dude, that looks fantastic. Like, seriously, that looks fantastic.
You got to work it, right? Always build and always finding some way to improve and give back to our viewers, right? And give them some value. So
yeah, that looks
any way we can do that.
Doing good stuff. So yeah,
let's take a quick question. What else we got? What we got in the chat out there?
I caught most of the stuff. Thank you guys so much. I appreciate all the encouragement and the kind words and stuff. And I mean, we always talk about the developing yourself as a trader and getting into your personality of what it means to be a trader and things like that. That's the important thing. Like, listen, like, this works for me. This might not work for you. That's okay. There's not one system that is working for everybody. Ryan says, what does it feel like to be the boss of Benzinga? I don't really know. Like, I'm not at that point yet, but maybe one day Jason will let me have a little bit of a boss like position with him. But
you already got that, man. You run your own thing, right?
Yeah.
Exactly. That's what it's all about, guys. But I definitely appreciate you mentioning about personality, because there's so many educators out there that just don't even talk about how strategies really go with personalities. Some personalities just can't trade certain strategies.
Exactly. Yeah, exactly. And don't try to force it on yourself. There's plenty of trading strategies that you can develop. Like, there's plenty of indicators that you can use. Find the thing that works for you. Don't try to adapt what I use as mine. Don't try to adapt what Mitch uses as his. Like take what you're being taught, mold it into a system that works for you, but ultimately develop your strategy because it's your strategy.
Definitely. I couldn't say it better there. I have to agree, because I was in a time when I've done it all, guys. I've gone from momentum, day trading, options, swing trading, long term. You just got to find what works for you. And a lot of that, I don't know if you do this, Brad, but it's keeping a lot of data, right, of how you trade.
Yeah, you gotta have a record. You've got to be able to look back upon your trades and see, why did I lose that? Why did I gain that? What was my entry? What was my exit? Like, you need to develop that. And if that's just keeping like a literal paper journal for the time being, write down every trade you make. Write down your entry, your exit, your profit, your loss, and also write down your mindset as to why you were taking that trade in the first place.
The gold right there, that last part, the gold.
Yep. It's very important to do. So. All right, I guess that's it. Appreciate everybody stopping out tonight. We will be back next week, Thursday, 5 o'clock Eastern, every week. I'll hand it off to you guys.
Yes, sir. All right. We'll see you next week, Brad. Thank you.
See you guys. Thanks, Aaron.